Well, good afternoon, traders, and we're talking about what's happening with a big event risk that we goes on for the rest of the week. Of course, everyone's focused on the Fed meeting that comes out in the early hours of Thursday morning for us here in Asia. We've got to obviously keep an eye on what's happening in the Bank of England meeting, and then obviously the non-farm payrolls number on Friday. But before that point, we have seen some fairly punchy moves playing through. Now, first of all, I want to touch on the equity markets. And if you have a look at our prices at the moment, you can see a fairly sea of green at the moment playing through. You've got some good gains in the Chinese market, the Japanese market. Hong Kong's had a bit of a snapback from what was obviously a poor day yesterday. But it's the ASX currently trading 68.46, just below the November 2007 highs of 68.51. The bulls want to see a close back above the 68.51 to confirm the breakout is of a reasonable quality. But we've got an all-time high in the ASX200. You can't really get much more bullish than that situation. There's a lot of people who have been trying to short into this move here, but on the belief that we can try and short into the all-time highs. But a market at all-time highs, in my view, should be traded as such. You can't really get much more bullish than that. There's no negative divergence, which we can see. The RSIs are around about 70, but they're not saying that we're at kind of nosebleed territory. If you have a look at the market internals, number of companies above their 20, 50, 200-day moving average, again, you're not showing any kind of signs of extreme euphoria. And we're trading close to 17 times forward earnings. Yeah, that's expensive on historical terms, but if we adjust that for the fact that implied volatility is very low, we've got the 10-year bond yield trading around 120. You've got a situation where the premium increases into the market and people are prepared to pay up for those earning streams. Of course, we do have earnings coming out Thursday. We've got Rio coming out of numbers after the bell. People are going to be watching for that stock just to see the extent of the cash return back to shareholders. People are expecting some big returns in terms of dividends or potentially buybacks of stock. But given where the iron ore price, people have been expecting the mining stocks to return a decent chunk of that cash back to shareholders' pockets. The other big talking point, of course, is what's happening in the pound. You can't mistake or get away from it at the moment. The pound is getting absolutely taken to the cleaners. Every rally is being sold into at the moment. In fact, it just keeps going lower and lower and lower. If you have a look at cable today, you can see that trading 121.57. We saw a decent move across G10 in the pound overnight. Really big moves mostly seen against the Swiss franc and the NOK, which benefited from a higher oil price, but also euro sterling has really broken out. If you have a look at the daily chart there on euro sterling, you can see that breaking through the sort of September 2007 or August 2018, December 2018 double top. It's trading now at the highest levels there since September 2017, despite the fact that we've got some fragility clearly in the eurozone. Euro sterling is a beacon at the moment. In fact, if you look at sterling against the Japanese yen, we're just testing those flash crash lows that we saw back on the 3rd of January. Of course, everyone's focused on what's happening in Brexit. It's not just about the cabinet, which is a very punchy statement to the EU that Boris Johnson means business here, but the EU really are not going to back down on the Irish backstop. And Boris Johnson and his cabinet have said that they will not even entertain a negotiation unless that's been taken out of the equation. So it looks like we're heading straight towards that 31st of October deadline with no stalemate whatsoever coming through. So the idea that we're going to get a no confidence vote just before that time or around that time is increasing by the day. Obviously, that would then potentially lead to a general election, given the small majority that the Tory party have in the House of Commons there. So certainly, that's raising up. There's about a 40% chance of a no Brexit in betting markets at the moment. But the way the pound's trading, clearly you can see that's the case. Now, as we go through the session, we are watching for the opening call on the FTSE. The FTSE is expected to have a strong open. That has been outperforming. It's up 14% year to date, but now this weakness that we're seeing in the pound is really resonating in the FTSE 250. That market is one of the strongest markets we can see around at the moment. But the opening call there we can see currently sitting 77.08. So that market looking like it's called up 64 points. That's probably the strongest market. A lower beta market, but gets grinding higher at the moment, and that's attracting a lot of buy money. In terms of event risk, as we go through the session, we're going to be looking at US earnings season. The index there being called up 4 points, 29 on the Dow, but we are going to be watching for those Procter & Gamble. We're watching for Merck, and we're also watching for MasterCard. They're the names that we'll be allowing clients to trade on through that session. In terms of economic data, well, there's a little bit of data coming through in Europe. We've got some economic confidence numbers, not expecting that to have too much of an impact in markets, but it's probably going to be focused on the US as ahead of the FOMC meeting. We've got personal income expected to be up 0.4%. Personal spending, we've got consumer confidence numbers coming out as well. Will these rock the boat? I wouldn't be expecting too much of a move. We're continuing to watch what happens in the FTSE. We're continuing to watch what happens in the pound. Are we going to see a snapback? Well, we'll have to see. We don't know what's going to cause that at the moment, apart from it being very oversold. But the trend is good, the trend is strong, and everyone's lining up to sell rallies in the pound at the moment.